Q1 FY2024 earnings conference call of Granules India Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. If you need assistance during the conference call, please signal an operator pressing star and 0 on your touchtone phone. Please note, this conference is being recorded. And now hand the conference over to Mr. Irfan Raeen from Orient Capital. Thank you, and over to you, sir.
Thank you, Emma. Good evening, everyone. Myself, Irfan Raeen from Orient Capital. We are an investor relation advisor company. On behalf of Granules India, I extend a warm welcome to all participants on Q1 FY2024 financial result discussion call. Today on a call, I am joined by Dr. Krishna Prasad Sir, Chairman and Managing Director, Dr. KVS Ramarao Sir, Joint Managing Director and Chief Executive Officer, Ms. Priyanka, Director, GPI and GUSA, Mr. Mukesh Surana, Chief Financial Officer, and Mr. Puneet, Head Investor Relations and GM Business Finance. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on company's website. Before starting this call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are based upon our beliefs, opinions, and expectations as of today. These statements are not guarantee of our future performance and involve uncertainties. I hand over the call to Dr. Krishna Prasad Sir. Over to you, sir. Thank you.
Thank you, Irfan. Very good evening to all of you, ladies and gentlemen. Thank you very much for attending our Q1 earnings call today. A detailed presentation of our Q1 FY20 performance had been uploaded to our website, and I am sure all of you would have gone through it by now. Update. Firstly, I would like to update you regarding the recent cyber attack incident. Our systems were breached by a ransomware group on the end of May. The effect of this included the breach of our systems and theft of our data. While swift measures were taken to contain and mitigate the situation and production activities were restored to a large extent by the first half of July, there were a lot of restoration activities on the quality front which are negotiable. Releases of products were delayed, and there were several scheduling conflicts that will escalate their way into Q2 as well. By early Q3, we would have made up for all backlogs and production activities will be back to normal. The impact of these production timelines has delayed some of our launches, which will now move to Q3 and Q4 versus original Q2. Barring Q1 and Q2, our growth trajectory is on track. When we are confident of getting back on track post Q2, there will be a revenue loss for the year which will be recoverable, the value of which cannot be entirely estimated at this time. We will continue to strive to strengthen our IT systems and processes so we do not have an incident like in the future. FDA inspection and product approval. During the quarter, we had 2 FDA inspections at GD Meta plant in Hyderabad and at Unit 4 API plant in Vizag. Both inspections were completed with 048 observations. We recently concluded a pharmacovigilance audit at GPI for all our products, which we went through with 0483 observations as well. Along with GPAC audit in Q4 of last year, we had 4 consecutive US FDA inspections with 0483 observations. During the quarter, we also received EIR for Gagillapur facility. During Q1, we received 4 ANDA approvals. These were for venlafaxine extended release capsules, supralol succinate release tablets, and levetiracetam tablets, and Ibu plus paracetamol combination. The construction of our new formulation facility at Genome Valley is progressing at a good pace. and we anticipate the completion of phase 1 by October 23, phase 2 by May 24. Upon completion, this plant will increase our current capacity of 24 billion units of tablets by an additional 8 billion units. Along with the recently launched greenfield packaging facility in Virginia, we now have our capacity in place for us to pursue emerging new opportunities and demand in the near future. R&D. Over the past 1 year, we have strengthened our R&D and product development capabilities, and we now have close to 300 strong R&D team members across our various laboratories at Genome Valley, Pragati Nagar in Hyderabad, Pune, and Virginia. These are geared towards fast-tracking integrated product development, building expertise in the area of controlled substances, complex products, and biocatalysis and enzymes. Shortly, Dr. C.S. Ramara will take you through more and explain about our R&D. As of today, we have 57 approved US NDAs, 5 European dossiers, 3 UK, 6 in Canada, and 1 in other regions. We have a total of 40 CMFs filed across several regions. Climate change and sustainability opportunity. The global climate crisis, rising temperatures, extreme weather events, and environmental degradation have heightened the call for transformative change. Businesses that can meet the need, innovative and sustainable products will be well positioned to capitalize on emerging opportunities and succeed in years to come. Granules is taking a pioneering approach at embedding sustainability within its business operations and decision-making processes. Our ambition is to become an industry leader and global forerunner in sustainability, driving positive change in healthcare. Driven by a strong sense of environmental responsibility, we are announcing our commitment to a sustainable future by setting a goal to reach net zero by 2050. Granules P0. Earlier this year, we announced our partnership with Greenco to establish the Integrated Green Pharmaceutical Zone, Kakinada, Andhra Pradesh. Granules C0 marks a significant milestone in our journey towards decarbonization across the supply chain, including mitigation of Scope 3 emissions and aiming for a near net zero carbon footprint on cradle to gate. At C0, we are adopting a frugal approach to investment, prioritizing a phased and stage-gated strategy. We have identified and finalized 2 sites, Vizag with 12 acres and at Kakinada, 100 acres. The first phase will focus on strengthening our core business for backward integration of paracetamol and metformin. During phase 1 at Vizag, we are putting up a pilot plant for PA and a commercial plant for PAP. The pilot DCDA plant will be completed by end of FY24, and commercial plant is expected to be completed by end of FY25. The project work for phase 2 at Kakinada will start in FY25 after completion of the detailed feasibility report and once we have all the statutory approvals in place. Organization transformation. Over the past 1 year, we have shared our roadmap for organization transformation. 3 central themes of this transformation journey are strengthening the core, R&D and innovation and sustainability, themes on which I have elaborated earlier in my remarks. In summary, our transformation journey rests on a steadfast dedication to creating a future-ready organization capable of thriving in the face of evolving challenges and seizing emerging opportunities. Our new purpose, vision, and values. As we embark on this transformation journey, we have revitalized our purpose, vision, and values, ensuring they embody our commitment to transformation. Our newly adopted purpose is healing lives responsibly through pioneering green science. It's just not a statement. It is the very essence of our passion, guiding towards transforming healthcare through innovation and sustainability. Our vision is to establish ourselves as a world leader in green chemical and pharmaceutical industry by harnessing cutting-edge technologies to enhance quality of life. Our vision is ambitious, inspiring us to push boundaries, redefine possibilities, and create change that extends beyond our horizons. With this, I hand over the call to Dr. K.S. Ramana.
Thank you, Chairman. Good evening, everyone. I will cover in a little more detail quality audits of our facilities, our response to IT incident, and progress on our R&D-led transformation. On quality, Granules India Limited stands as a responsible leader in the manufacturing industry dedicated to providing medicinal products that adhere to the highest standards of quality and compliance. Compliance is considered essential and an utmost priority within the organization. It plays a vital role in nurturing a culture of quality among all individuals, resulting in a transformation that permeates throughout the organization. The recent US FDA inspections of two of our API manufacturing facilities at Hyderabad and Vizag resulted in zero 483. The regulatory success in the manufacturing plants was in spite of critical cyber attack at the manufacturing sites. The methodology of handling the cyber attack, the investigational reports, actions taken post the cyber attack were well appreciated. A recent pharmacovigilance inspection of our Chantilly facility also resulted in zero observations. These outcomes demonstrate the management's commitment towards quality. On the cyber attack and our bounce back, the issue of cyber attack and our actions have already been notified. A little bit has been told by the chairman right now. I wish to present a brief summary. On 24th May 23, systems got attacked by Lockbit 3.0 ransomware. It encrypted the critical servers, mailboxes, networks, and endpoints. Immediate actions were taken post the incident at all our facilities, including containment and isolation. All the systems, including servers and endpoints, were disconnected from the network at switch level. Affected servers and desktops were switched off and isolated them from the network to contain any further spread. We disabled the internet access and flow so that the system could be disconnected with the external environment to contain any data exploitation. The restoration methodology created a completely new clean network with new network and micro-segmentation, and we added all the systems into the new network. We built new servers in place of affected servers such as Empower, KD servers, ADC servers, separate VLANs, R&D servers, health servers, and QA/QC systems, enterprise applications like DMS, QAMS, etc., and restored all the plants, all manufacturing facilities, and the support services within the shortest possible time, including qualifications as required by the regulatory environment. Serialization of 4 lines in the manufacturing were restored within a couple of weeks, timeline to include qualification and to restart our manufacturing activities. All the backups were restored in all the Empower servers which are created new. Standalone systems backups were created with only 1-day data loss which has been recovered. All the Office 365 mails were cleaned and protected with the security tools and laptops. Helix and Sentinel-1 XDR used for monitoring and protection. The mobile device management tool was used to protect mobiles for all the data protection is installed on all the official mobiles of the organization. We have constituted a team of internal and external experts and designed the system architecture and controls which enables us to focus on prevention as well as preparation from future attacks. This total solution is expected to be in place in a couple of weeks. A review and governance mechanism is established in management with a sharp organizational focus on this very critical and identified high-risk area. With all these efforts, which have been relentlessly carried out and operations have been distributed at all locations in the US, it has resulted in supply interruptions which led to shortage of sales in the quarter. English will reach the details. Regarding the transformation journey, over the years, Granules R&D strived towards establishing the company's dominance in select healthy products and has been very successful in that endeavor, and the effort continues to be a dominant leader in these products. However, in the last 1 year, there has been a paradigm shift in focus to R&D. The company has shifted its focus on portfolio to ensure that we leverage our core strength and build the future for it. This shift in focus called for bolstering the R&D strength, both in terms of manpower, infrastructure, and the analytical equipment. This has resulted in setting up state-of-the-art integrated product development centers in Silicon Valley in Hyderabad. This center, where both formulation R&D and R&D are housed under one roof, seamless execution of projects has been. The entire development at the center is based on green and eco principles as enunciated by the chairman as well as the purpose that we want to live on. In our earlier calls, I mentioned...
Sorry to interrupt you, sir. Sir, we are unable to hear you clearly, sir. We are losing your audio in between.
All right. I'll come here. Now we are able to hear clearly?
Yes, it's better. Please go ahead.
Thank you. In our earlier calls, I mentioned that the renewed focus of the organization R&D, it's time also to talk a little about its nature and a bit of quantification of the efforts. At present, there are more than 30 products which are under various stages of development in our center, which includes oncology, controlled substances, and other therapeutic categories. The majority of these projects are scheduled to rise in the next couple of quarters. The mix of the portfolio includes launch and approval products, A181 launches, and first-to-launch products and NCE-5. The portfolio aims at launching these products globally in all the geographies of our business interest. Yet another significant aspect of the R&D is focus towards sustainable new technologies. The company is laying special focus on products where the biocatalysis can be successfully employed. To create a differentiation, R&D has joined hands with companies specialized in enzyme design and gene synthesis and is successful in developing proprietary enzyme solutions for desired chemical transformations. We have had initial success in getting cost-effective non-infringing enzymes and have been successful in scaling up at our enzyme facility, which we acquired a couple of quarters ago. We expect the commercialization of these products using the in-house enzymes to happen in the next couple of quarters. This is an outcome of the transformation that the company is presently undergoing in the area of science, technology, and innovation. Thank you all, and I'll hand over to CFO Mukesh.
Thank you, CMD and GMD. Now, let me take you all to the top financial parameters now. The first quarter revenue were 9,855 million as compared to 10,196 million in Q1 FY23, a decline of 3%. This decline is primarily on account of business interruption due to the IT incident happened during this quarter. Despite the IT incident, which has impacted expected revenue growth in all geographies and price erosions across markets on year-on-year basis, North America registered a 10% value growth and Europe registered a 5% value growth. Latin America and ROW revenue decline was steep year-on-year, which is also on account of inventory correction by customers in these regions. Our API business grew year-on-year volumes despite the impact from the IT incident. Share of PF business has reduced as more customers are converting into FD from PFI, coupled with correction inventories in the Latin and ROW markets. The Q1 FY24 revenues declined by 18% sequentially as compared to Q4 FY23. We are carefully assessing the loss of sales in Q1 FY24 due to this IT incident. Our current estimate is more than 1,500 million. The sales breakup details as per business division and geographic region is presented in our investor presentation, which is available on the website. Value added. Our value added as percentage of sales for Q1 FY24 was 51.4% as compared to 49.6% in Q1 FY23. Value added percentage as compared to Q1 FY23 is increased by 1.8% points, primarily on account of better product mix and reduction in rates of key raw materials. Value added as a percentage of sales Q1 FY24 is up by 3.6% points from Q4 FY23, primarily on account of better product mix and reduction in rates of key raw materials. EBITDA and EBITDA margin. EBITDA for the quarter was 1,378 million, that is 14% of sales, as compared to
2,115 million, that is 20.7% of sales in Q1 FY23. A decrease of 35% over the previous year EBITDA value, mainly on account of reduction in revenue due to the IT incident and increase in operating expenditure in line with the expected revenue increase, coupled with increase in R&D spend by 94 million. We were impacted by failure to supply penalties of rupees 211 million in GPI this quarter. We have incurred so far about rupees 50 million related to the IT incident and its incidental expenses such as detention and demurrages due to the business interruption. We have been incurring operating expenses and depreciation in our new packing facility in USA, whose savings will start from Q2 FY24 in the form of improvement in VA percentage. Our R&D spend for the quarter was 413 million, that is 4.2% to sales as compared to 319 million in Q1 FY23, that is 3.1% to sales, and 369 million in that is 3.1% to sales in Q4 FY23. We are going to continue to spend on R&D in quarters as well for the planned R&D pipeline for our future growth. Net debt. Our net debt was at 8,569 million as compared to 7,671 million at the beginning of the year. The net debt has increased at 899 million, primarily on account of the reduction in operating cash due to reduction in revenues and operating profit, and also resultant higher cash-to-cash cycle. Cash-to-cash cycle was at 170 days in the current quarter as compared to 132 days at the beginning of the year. The increase is primarily on account of the increase in inventories as we could not sell as per our expected plans due to the IT incident. Operating cash flow. Despite business interruption, we ended the operating cash flow with a positive 35 million as compared to 1,807 million in Q1 FY23. The reduction is primarily on account of lower revenues and operating profit and resultant higher cash-to-cash cycle. CapEx spend during the quarter was 741 million. It is in line with our plan for FY24 as guided in our last call. ROC for Q1 FY24 is 9.4% as compared to 21.1% in Q4 FY23, primarily on account of reduction in EBITDA due to the reasons mentioned earlier. With this, I open the floor for questions.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We'll take the first question from the line of Rahul Veera from Abacus. Go ahead, sir.
Hi, sir. Sir, just wanted to understand one thing that you mentioned there will be some delay in launches of products from Q to Q3. Are there any commitments or in terms of supplies for Q that you are expecting from this product? I mean, is the possibility of one more PS coming through, failure to supply?
Rahul, we have not committed to anybody. There were interest or preliminary discussion with customers, and of late till product reaches the US, we have not been making any commitments. Definitely, there's no possibility of FTS on account of late launches.
Sure. Fair point. Sir, all the FTS that was required to be accounted this quarter has been done, or any pending FTS is expected in coming quarters?
Yeah, I'll just clarify. All failure to supply penalties have been fully taken into account in Q1. And, the Priyanka can add it, but I just want to clarify also, Q2, we see that there is a major improvement in the new CPL, and we don't foresee a major structure of failure to supply in Q2.
Sure. And what was the amount for Q1, sir?
Q1, 211 million.
Okay. Thank you so much.
Thank you, sir. Before we take the next question, a reminder to all the participants, if you wish to ask the question, you may please press star and 1 on your touchtone telephone. We take the next question from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Just a follow-up from the earlier question. You mentioned 21 crores of FTS is sitting in other expenses. This was related to only US geography or with the other markets also? And was it for API, specifically API segment, or it's spread across the segment?
So this is largely in USA, and it has happened in GPA entity. So this is not related to here. These are controlled substances and some of those the products.
Okay. And you mentioned that in cost two, this is all done in quarter one. Now nothing is expected in quarter two.
Yeah. So the migration of the new cell happened around quarter 3 May 23 and third week of May 23, and it has significantly improved with the new CPL now in quarter 2.
But we don't expect too much. There could be very minor FTS, Rashmi. We still don't know, but they could be very minor.
Okay. So if I exclude this 21 crores from your other expenses, excluding the R&D cost of the close, then your other expenses are actually come down from quarter. So, any specific reason for that you have, you are taking any cost initiatives or anything like that?
See, other expenses also include site cost and also sales commission. So those are related to sales. And in addition to that, the freight rates are also have slightly reduced sequentially also. And there were some failure to supply expenses in the quarter 4 as well.
Okay, got it. And can you also quantify what is the loss to sales due to this IT incident during the quarter?
Yeah, just covered in my speech, we are currently carefully assessing. Our current estimate is more than 1,500 million.
More than 1,500 million, 1,500 million. And also when you said that, all the systems have been restored in July month, is it fair to assume that in the second quarter we will have some 15% impact coming in the quarter?
There is some spillover on quality systems, Rashmi. There would be some effect in Q2 also. And Q2 not only in loss of some dispatches, the main hit will come from the anticipated launches. What we planned Q2 will now move to Q3 and Q4. So there will be some act of IT that's coming into Q2, mainly the launches.
Okay. So sir, then any guidance would you like to FY24 on revenue numbers or specifically on extra margin because of this IT incident? You are downgrading your earlier EBITDA margin guidance that it is not the range taking % or anything you would like to say, or you feel that quarter 3 and quarter 4 are sufficient, to adjust, the guidance?
So, Rashmi, in my speech I mentioned we are assessing how much of the lost sales we can recover, and some of it is definitely not recoverable. So it's a little difficult to estimate right now, and we would definitely not like to give any guidance.
And the last question, to Priyanka, if you can revise the number of, what are the total commercialized launches in the US market, and how many launches are we in quarter 3 and quarter 5 for the entire FY24, and what is the price erosion currently looks like, whether it is still in high double digits or due to supply disruption it has come down?
I think, Priyanka, why don't you take that?
Sure. Good evening. I think I got your question right. Your first question was how many launches, how many overall products we have in the US, am I correct?
Yeah, what are the total commercialized launches till date, and how many are you planning in FY24? And what is the price erosion currently looks like, whether it's got stabilized from the high double digits or if we are still in high double digits?
Okay. So to answer your first question, in total in the US we have 37 to 39 products launched already. Over the next 2 quarters, we have close to we are definitely going to launch 3 products. But if everything works out, we launch close to 6 products. The effect which you see primarily in FY2024, FY2025, my apologies. In terms of price erosion, there has been a sign of things easing up. I said this even in the last investor call. Since beginning of this this fiscal year, I would say it's been pretty much stable, at least for the last 4 months.
Okay. Thank you so much. That's it from me.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Tushar, Motilal Oswal Financial Services. Please go ahead, sir.
Yeah, thanks for the opportunity, sir. Just on this, given that if I adjust for this 21 crores period supply, then broadly we should be 200 crores sort of a run rate for other expenses, right, on an absolute basis in the coming quarters?
Yeah, 200. You were asking about the failure to supply, right? 21 crore.
Excluding failure to supply.
Yeah, excluding failure to supply, the other expenses we cannot take simply as run rate because some are related to sales expenses also, as just clarified. Freight and sales commission are also there. So there are certain variable expenditure also in other expenses.
So as a margin trajectory, we'll have a gradual uptick in EBITDA margin, or we'll see a good improvement from 2Q or 3Q onwards?
Of course, there will be a gradual improvement in EBITDA.
And secondly, just on the capex with 74 crores in Q1, is there any revision in the full year 24 guidance?
No.
Given that we have these issues.
We are saying, we are in line with whatever we have guided in our last call. So we are in that plan.
Okay, sir. Thank you.
Thank you. The next question, a reminder to all participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. With the next question from the line of Poddar from Sapphire Capital. Please go ahead, sir.
Hello. Hello.
Yes, we were gone.
Yeah, thank you very much for taking my question. So I just have one question on R&D expense. Current quarter was around 43 crores, right?
Yes.
And so how do we see that trend in coming quarters on R&D expense?
I think the R&D expenditure is only going to go up in the next 3 quarters because, as I told in my speech, we are going to really look at filing the products in this year, which will be of a much higher level compared to what we used to do in the last couple of quarters. So therefore, R&D expenses definitely will go up.
Go up to 43 crores to around 50 crores maybe next 2-3 quarters, right?
Yeah, so quarter 2 can be more than a little more, but quarter 4 we might spend more.
We might spend both?
Yeah, more than 15 quarter 3, quarter 4.
Quarter 3, quarter 4 will be more than 50, I understood. And now on EBITDA margin, you mentioned like we expect a gradual improvement in EBITDA margin, right? So any numerical sense would you be able to provide? I mean, so that we get some understanding.
We don't give the guidance, but you see our gross margin has improved to 1, and we are looking quarter 2 also. Gross margin would improve.
No, at the EBITDA level. I was just wondering at the EBITDA level.
So accordingly, our EBITDA margin will also improve, but we don't give a detailed guidance.
Okay. Sure. I get that from my side. All the way. Thank you so much.
Thank you, sir. We take the next question from the line of Mr. Aditya, an individual investor. Go ahead, sir.
Yeah, thanks for giving the opportunity. Sir, my question is related to this erosion, right? Can you about the pricing erosion, but I don't see that in the numbers. So how one should understand about the pricing erosion in our scenario?
I will just clarify. When we say price erosion, it is quarter one of the last year, quarter one of the current year.
Okay.
So last year, quarter one, the raw material prices were at a peak level. Accordingly, steel prices were also at a higher level. So both have fallen. So our margins, despite price erosions, we are trying to maximize.
But last year our gross margin was at
We were at 49% last year.
yeah, currently 50 plus, right?
Yeah, currently it is 51.4%.
Okay. If there is a price erosion or something that which should reflect our gross margin, right? My understanding is that.
No, so what I am trying to explain is, price is reducing. Of course, the key raw material prices are also reducing. So my margin percentage is, currently better, as we are also maximizing the cost improvement areas also. So my gross margin is better.
Okay. And since I see there is a lot of employee expenses is going on as we are ramping up R&D, could you talk about which areas, like how much? Because I see there is an increase in R&D in quarter 3 and quarter 4. So basically this year will be an investment phase. What kind of talent are we hiring and what are the areas we are looking forward, and how is our green chemistry is going on? Can you shed some light here?
Yeah. As mentioned in my speech, there are 3 areas where we have really ramped up our capacities. Number one, in terms of our API and chemical development of the new products. I think last year we filed 7 drug master files, and this year we are targeting a much higher number. Not only that, we shifted our portfolio to looking at complex products. We are looking at some kind of newer opportunities and the global development of the products. This is one shift which is there in the R&D, which calls for talent in terms of chemistry, analytical chemistry, and also engineering excellence to take the products into smoothly tech transferring into manufacturing. So we established this entire talent pool, processes and systems to enable us to ramp up to this capacity, which is not so easy in less than 1 year. So the whole organization is looking at transformation. The second area of transformation is actually focusing on new technologies. I have been consistent in my last 3 quarters that we have been working on fermentation and biotechnology in the area of enzymes. And every quarter we improve, and this quarter I told you that we have successfully scaled up enzymes in our newly acquired facility, which we have taken over about 6 to 8 months before. And then we started building up the enzymes, and we have already started optimizing the products. We hope to commercialize at least two products in the next couple of quarters. The third area is in the ANDA filings. This is not only to US, but we have a global filings in Europe and rest of the world. And with that type of orientation, the product development has been, it's a paradigm shift the way we look at product development in my studies. And the talent and the expertise has been built to that level to enable us to do global product development and look at various geographies of filing. I think these 3 areas put together is not only enhancing our capability to file not only in US but in the rest of the geographies of business interest, but also the talent and the additional resources which are required to deliver these goods and services. And we are continuously committed to making sure that this happens, and therefore the R&D expenditure will go up in the next 3 quarters.
Aditya, to add to that, the manpower expenses have also gone up at GPAC, the new packaging which we started in the US. That is to start yielding results only from Q3, Q2 to Q3. That's one of the reasons for manpower expenses going up, in addition to R&D manpower. And also, we have increased some capacities in our Gagillapur plant, where also the manpower cost has gone up a little bit.
Right. Sir, may I ask in for this green chemistry, I think the growth from these will meaningfully start from FY27, right? FY26 or 27.
Yes, you are in the ballpark number, Aditya. We, I covered in my speech, they're setting up a pilot plant for BPA in Vizag, which will not be a green, but we are establishing a technology which we developed in-house. And as most of you know, BPA is not manufactured by anybody outside China. It's a complex chemistry that we were able to break through, but the pilot plant will demonstrate. So we've been very cautious in our investments, major investments. So before we go to Kakinada to do the green plant, we are just demonstrating this here for ourselves. On app also we are putting up a small demo plant, commercial plant, and later on we'll scale up in Vizag. 2027, we will see the real effects.
Right. But if I see for the next 2 years, we have to generate enough cash flow in order to more give also the more chemistry and further also. So coming to the short term, this 2 years, since we are having a problem on the pricing and we are delaying launches for one of the quarters, so where do you see in this couple of years you see the growth will coming in based on the commercialization of products, or which area should we see that there is uptake possible here?
Like you heard Dr. Ramarao and Priyanka mention, we are filing for a lot of products. Already filed products, we have received some approvals. We will be receiving some more approvals as we go by. Every quarter there will be some approvals coming in. All the new launches are going to drive the growth. And we do not see cash as a major problem. There could be short-term blips, like this quarter because our cash generation has slowed down. There could be a small blip. But going forward, we don't see a major problem in generating cash to meet our fixed commitments. There could be blips in a year, but overall, we are confident we can generate and fund these projects similarly.
Okay. So talking about products, these are since paracetamol and metformin as we are expanding. Any other specialty product we are working on gives you the confidence that we'll have a good cash flow here? If you talk about some of the products here.
Aditya, I cannot name the product, but there are a lot of products that we have been working on in the past and we have launched, and they have actually taken a good shape. In fact, we used to talk of core products with the paracetamol, metformin, ibuprofen, guaifenesin. But now if you see, there are more products that have come in basket, and more products will be adding up. So all our current launches, past launches have been very successful, and control substances in the US also are gaining strength. So there are a lot of products that are gaining strength, and we expect new launches also to gain strength as we go by.
So by next year, you see that we would be adding one of the meaningful products so that we'll be able to see up in the, so that will be meaningful contribution to our revenue. Or it will be also.
There are some products, a few products which are giving meaningful revenue, and as we go by, definitely the new launches also will add up. There are some very good products in the new basket.
Okay. Thank you, sir. All the best. Wish you all the best.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Take the next question from the line of Ashish Kaur, Standard Chartered Bank. Please go ahead.
Yeah, thank you for the opportunity. So I just want to know the positive takeaways post this cybersecurity incident, and is there any increase in expense related to cybersecurity going forward, and how much time it will take to normalcy, and this short-term working capital which was caused because of this cash crunch, do you think it's going to fade post 3-4 quarters once the things absolutely return to normal?
So on the cyber security, we have taken three different actions, which are towards prevention as well as preparation of ourselves to make sure that the organization is very resilient. And this includes a lot of system architecture improvements as well as certain new software solutions. And we continue to look forward to the new solutions and also continue to build the system architecture with external experts in such a way that this incident will never repeat. And therefore, this is going to have some kind of an expenditure in terms of the IT as a major area to focus upon, and we continue to invest in this area.
Yeah, do you expect the working capital, that 89 crores, almost 89 crores, to come down post when the operations are normal quickly?
Yeah, the working capital cycle, CCC days, will dramatically come down for sure. Actually we ended at 152 days. We are at 170 days. So we will go to normalcy, and the expected plan is to improve over last year.
Okay, thank you.
Thank you, sir. The next question is from the line of Vikas Chandra from NP Asset Management. Please go ahead, sir.
Yeah, hi, good evening. Could you also touch on the molecule-wise performance for this quarter? I think it's not included in this quarter's presentation.
Yes, very consciously, we have not given this presentation because the entire basket has gone through a shift, and the top 3 products, 4 products are no longer top 3 or 4 products. Other products have replaced some of them. And this information is becoming very sensitive in regard to competitors because it goes into the public domain. So we will not be able to give you the break.
Some qualitative color on what's the share of top 3 molecules as a trend, and where do you think this ratio is expected to settle, say, in 1 or 2 years down the line with new products coming in?
Like I said, because some other products have actually replaced the order of the top products. And when I do the breakup, it really gives us a lot of information about what's happening. So, like I said, it's sensitive. We would prefer not to discuss that.
No problem. Thank you.
Thank you.
Thank you. Next question is from the line of Nirali Shah from Ashika Group. Please go ahead.
Yeah, can you shed some qualitative light on the new product launches that are expected in the second half of the year?
So, the launches that we are looking at, as Priyanka has just informed, that we are looking at 3 launches to at least 6 to 7 launches in quarter 3 to quarter 4. Originally, we were planning to do a few launches in quarter 2 because of the IT and cyber security issues. We have to get the launches in quarter 3. But suffice it to say that we have a significant number of launches where approvals have already been there, and we expect it to be around 6 and more.
Just to add to that, most of these products, if you ask for the qualitative light, they are from our MUX block, and they are relatively more complex products. There is a very large opportunity available in the US market because the primary launches are in the US market. Even those in the European market should be launching in Q3, ongoing for the rest of the year, are pretty large in terms of volume and value.
Got it, thanks. And my second question is, can you update us on the development of KSMs for the backward integration of paracetamol and metformin?
Nirali, like I just mentioned a little while ago, BCDA is one of the key materials for raw materials for metformin, and we are setting up a pilot plant. And then the commercial plant we will start in 25. In 24, we would have demonstrated the working of the pilot plant. And then PAP, the other raw material for paracetamol, we are setting up a small commercial plant in Vizag. And once this is demonstrated and parameters are fixed, we will build a bigger plant in Vizag using all green raw materials in Vizag. Green raw materials generated from in Kakinada.
Understood. Thank you.
Thank you. Next question is from the line of Ms. Richa from Equity Master. Please go ahead, ma'am.
So thank you for the opportunity. My question is, with these new launches and products that you are coming up, where do you see the share of value-added products, which is currently, I think, around 50%? And, if you could also give a sense of what kind of margin difference is there when you categorize something as value-added versus what is not value-added. That is the first question. And the second question is, keeping in that we are keeping our debts intact. What kind of incremental debt are you looking at it for? Also share peak debt that you expect in the coming quarters or years.
On the new launches, I think, as mentioned by Chairman and in our I think when we start adding new products to our overall portfolio, we see that the value add is going to be better, and that is where we don't want to disclose a lot on the combination and also the percentage where it will be shifting. Suffice it to say that the number of new product launches, both in controlled substances as well as the launches that we are going to do from India, where we are utilizing our capacities, I think we will be able to really see a good combination of the products changing the mix over a period of next couple of years. Coming to the capex investment, I think Mukesh can talk about.
Yeah, so capex investment we have guided this year we will be doing close to 700 crores, including future growth expansion. So that is intact. So we are having the same guidance for the rest of the year.
So my question was on, the incremental debt that you could go for this. Considering that there has been some kind of, slowdown and delay in launches, and what is the peak debt?
So there will be in the debt, and one to fund increase in working capital also, and capex also. But operating cash flow, is going to be more or less sufficient if I take 2 to 2.5 years cumulatively. For the current year, there is in debt. We are not quantifying it yet, otherwise, it would become guidance.
Okay. And sir, I just wanted to understand some kind of, if you could add some color on the margin difference when you get something as value added versus on an average basis.
I'll just take that. I think for a bit, again, like CMD said earlier, there is competitive knowledge for very large institutions because we have a limited number of products. If we say value added, we've already mentioned the names of the products that we end up doing a little bit of competitive information at this point.
All right, I understand. Thank you so much. All the best.
Thank you. We'll take the next question from the line of VKS Chaudhary, an investor. Please go ahead, sir.
Hello, this is Chaudhary from Hyderabad. My question is about GPI. It has been operational for about more than 3 years, but their contribution to the bottom line has been positive only in about a couple of quarters, despite having had quite a few approvals from that side. Is there any reason as to why it's being in losses? Hello?
Sorry, the question was not very clear. Can you just repeat it?
It's about GPI. Hello?
Your line is not very clear. Can you please repeat your question?
Yeah, my question is about GPI. Okay, it's been operational for more than 3 years, and had several approvals, including 3 or 4 controlled substances. Yet, their contribution to the bottom line has been barely positive in a couple of quarters. Rest of the quarters it has been negative. Are there any specific reasons as to why GPA has been a drag on the company?
You were not very audible, Mr. Chaudhary, but whatever I answer your question, I'll attempt to answer that.
Yeah.
First of all, GPI has been in existence for more than 3 years, number one, and it was contributing handsomely to the bottom line a few quarters ago. But now, of late, last few quarters, we had, we have been discussing this all along, that we had issues with our 3PL, and which resulted in a lot of failure to supply and also loss of sales. This has really impacted, and overall, even though as a standalone performance has been fairly okay, but the failure to supply from GPI hit us. That's the main reason why GPI has not contributed much to the bottom line.
What about controlled substances? I had about 4 approvals, but are all of them launched? That coincidence?
Yeah, all the products have been launched, but Priyanka, I think it's for you to give this answer.
Sure. We launched all the products, but because of the ongoing quota issue, I'm sure you've seen the news, we are going conservatively on the quantum of market share that we capture. But usually we have launched all the products with small scale.
You expect to ramp up in the current next quarter?
Yes, absolutely.
Okay. My second question is about Foray. Are you planning to, your fabrication plant? Hello?
Yeah.
Are you planning to stick to pharmaceutical related products only, or are you in terms of catering to other industries like textiles, etc., from the fermentation and enzyme vision?
See, currently our focus is to stick to the pharmaceutical industry and to the portfolio that we have, and we are trying to look at this from the perspective of making sure that our products are green, which is a part of our vision and a mission. And the second one is to really look at how do you make sure that you bring new technologies as a long-term sustainability. So we are going to stick right now to our own area and our own portfolio.
Okay, thank you.
Thank you, sir. We take the next question from the line of Mr. Tushar from Motilal Oswal Financial Services. Please go ahead, sir.
Yes, sir. Thanks for the opportunity again. So just on gross margins, where I see that the proportion of API segment has increased both year-over-year as well as quarter-over-quarter. Still, we have seen improvement in the gross margin. So anything which I'm missing out here?
Yeah, sure. There is an overall product mix, in API and also in the FD. There is an overall product mix which has affected positively on the gross margin. In addition to that, the raw material prices also has helped in improving the gross margin.
So gross margin should subsequently improve, right? With higher recovery in the formulation business in the coming quarters.
Yeah, so that's right.
Okay, sir. Thank you.
Thank you. Next question is from the line of Madhav Marda from FIL. Please go ahead, sir.
Yeah, just one quick question. The IT incident, was there any one-off cost related to any consultant you had to hire or anything else like that, which you need to call out for this quarter?
So IT incident expenses I covered in my speech is we have incurred about 50 million for expenses and also related incidental expenses such as detention and demurrages which has impacted the business.
This will be after quarter 2 or maybe quarter 2 onwards should not recur, right? This is related to the
some expenses would be there, but it won't be substantial.
We still need to keep strengthening our systems, Mother. There will be some expenses. And also, we may have to hire this security experts or an agency to help us with this. So that will also take up the expenses, but I don't think it will be major.
Good. Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand over to the management for closing comments.
So, ladies and gentlemen, once again, thank you very much for joining us. I wish you all a very good night today and look forward to meeting you with happier results next quarter end. Thank you.
Thank you. On behalf of Granules India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
This is good for if you don't have a model. तो सीधा तो इसे ही कर सकते हैं 5-1 अभी टेक्निकली कहीं इसके अपनी हर कंपनी का थोड़ा अलग फॉर्मेट है otherwise is also true कि like कंपनी में जैसे ही रिजल्ट पब्लिश होगा we take that